Hooty hoo, all my stock market gamblers. Welcome, welcome. I'm Tall Mike. Today is Friday, October 30th. We got the weekend ahead. But it has been a tough week for the stock market. We had a big down day on Monday, kind of flat Tuesday, big down again on Wednesday. We had a little bounce on Thursday, but we're down again. We're down about 400 points. So the week has had a tough week if you were long the stock market. But we got the weekend ahead, and I don't like when the stock market's closed. I actually prefer the weekdays. I love the stock market, and that's what I do. The weekend, we got 2 days off. So during this 2 days off, I'm going to give you a good book to read. Jesse Livermore, World's Greatest Stock Trader. This book is a great read. You can pick it up cheap on Amazon or eBay or somewhere, but I recommend it for anyone that wants to be a stock trader, that wants to be a stock market speculator, that wants to be a stock market gambler. Jesse Livermore made most of his money on the downside. He bet the market would go down. During the great crash of the Great Depression, Jesse Livermore made a fortune, and a lot of people blamed him for the crash. It's a great read. If you get a chance, pick that book up and read it over the weekend. Now, I want to talk about some things. It's a fact that the stock markets actually do go down. Now, the Federal Reserve, they're going to want to prop this up. They're going to print money. They're going to try to make the market go up. A lot of the Robinhood traders think that stock market only goes up. They think that if you buy the dips, you'll make money. And that's held true for the last 6 or 8 months. If you bought the dips, you made money. We're going up because we're getting the stock market inflated by the stimulus packages that keep coming out, the free money for the unemployment, the free money for the stimulus, the $1,200 checks, keep the markets going up. But I got news for you. The stock markets do go down, and they can't even crash. We could have a stock market crash. Yes, it's possible. Okay, today, what saved my butt really was Tesla, TSLA. Just out of the blue yesterday, I was looking at charts like I always do, and I look at a chart of Tesla, and I go, Tesla's going to go down. I bought out, an option just 2 weeks out, actually to expire next Friday. Now, this option went from $300 up to $1,400. I don't know, what is that, 4 times. Okay, now I have some long positions on, actually too many long positions. My Microsoft, it got killed today again, and anyways, the XLF is my financial plays, that's getting hit also. But Tesla, it went down $25 or so. The option that I paid $300 for yesterday has ballooned up to $1,400 today. So this kind of saved my butt. It made my day much less painful than it would have been. But I do think we're going to get a stock market rally, but sometimes you want to put protection on. Now, I was deciding between 2 options yesterday to put some protection on, to buy a put on, to protect my long positions. Anyways, I was looking at Tesla and I was looking at Netflix, and they both just got hammered today. Now, the reason I was looking at Netflix is that it had rallied up yesterday on the news that they're going to raise their fee that they charge people from $14 a month to $18 a month, and the stock shot up $20 on that. Well, I thought, well, that's a temporary fix, that Netflix still has problems, so I thought that would be a good short also. Either one, if I had picked either one, it would have protected me to the downside, and we got a big downside today. We were down about 500 points. I think we're down 400 points at the time of this recording. My point is, you want to have some protection on. Now, would I buy puts in these today? No. I'd be a seller of the puts. I'd sell them today, and I would be out of these. I'll be out of this trade today. I think we're going to get a relief rally in the stock market. I think we will. I think we will get back to the 50-day moving average on the SPY. Now, if you look at a chart of the SPY, we've crashed through the 50-day. But what usually happens is we usually get a bounce back to the 50-day. Now, I think that 50-day will become the resistance level. it will become resistance, which means we'll rally back up to that. We'll get the relief rally starting, I would say, maybe Monday and Tuesday of next week. But we're going to have volatility like crazy because nobody knows who's going to win the election. And the stock market does not like uncertainty. So we may get big downswings, big upswings, a lot of volatility. Now, one thing that Jesse Livermore always said, he said cash is a position. You don't need to have a position up in the stock market or down in the stock market. You can be sitting in cash, and that is a position in and of itself. Now, I call it dry powder. You always want to have some dry powder available for the opportunities that present themselves in the stock market. There's always opportunities. There's always stocks that are going to be going down. There's stocks that are going to be going up. But you want to find the trend. You want to find the trend in the market. Now, right now, the trend is down. And until we get back above the 50-day moving average on SPY, I think the trend will continue downward. Now, we may get that $3 trillion stimulus package passed, and we may just shoot right back up to all-time highs. Very possible, and that's why it's hard to short the market. We don't know exactly what the Fed is going to do or when they're going to do it. And the market is completely dependent upon the Federal Reserve. And this is why I know they're going to print more money, which is going to mean more debt for the United States, which is bad for the United States. It's bad. And so this is why I want to protect myself, and I do that with gold, silver, Bitcoin. But today, I was fortunate enough to have a put on Tesla. A Tesla put saved my butt today. It could have been a Netflix put that I put on, and that would have saved my butt also. It protected myself from my long positions. My long positions in Microsoft. My long positions in the XLF, the financials. The VIX today, now the VIX is interesting. Now here's why I think we're going to get a relief rally. The VIX was trading down here at 25 and we're elevated up to $40. But if you look at the puts and calls on the VIX, you go out a couple weeks, a put will cost you about $10, where a call will cost you only about $5. This means the VIX, that people, the professional traders are expecting the VIX to come in. They're expecting the fear to come out of the market. Now, how does fear come out of the market? It comes out of the market when the market rallies. It gets the relief rally and people, oh, I made it. I didn't lose all my money. And they start buying again. Well, what's going to happen then is the market's going to get slapped down again. And that's where you want to have your shorts on. You want to put the short trades on. Now, the ones I'm looking at Peloton still as a short trade. If that gets back to 120, I'll go short on Peloton again. Netflix and Tesla both got hit hard today, but they could rebound strong if we get that relief rally. And maybe they're the ones that you want to put the protection on. Those three stocks they're great companies. Nothing against the companies. Tesla makes great cars. Netflix provides great entertainment. And Peloton, well, they got this exercise program that apparently people like. But these three stocks are massively overvalued. And they probably will come in. They probably will take a hit at some point again. But don't short them now. Don't put the put options on them. They got beat up today, and the stock market's getting beat up. I think we'll get the relief rally next week. I think we will, but there'll be a lot of volatility. We may have 1,000-point swings in the same day, down 500, up 500. The election is very, very close. It could go either way. Stock market doesn't know. Does not like uncertainty. So maybe take some money off the table and have that position in cash. That's what Jesse Livermore says. Cash is a position. Read this book, World's Greatest Stock Trader, Jesse Livermore. It's a fantastic read, but it teaches us so much about his thinking, about how he made his fortune in the stock market. That's all he ever did. He started when he was basically 14 years old. I think he was one of those guys that ran up and wrote the quotes on the chalkboard. This goes back in the 1920s and 30s, way back when we had a real market, when the Federal Reserve didn't manipulate everything. It was a free market back then. And Jesse said you could make so much more money on the downside because the downside went so fast. The upside, step by step, kind of grinding it out, step by step. But the downside just dropped like a rock. I think we're going to get the relief rally next week. We'll see. Election very important. This weekend, read Jesse Livermore, the greatest stock market trader of all time. You will learn something. You will not regret reading that book. If you like this stuff, click the like button. Hit the subscribe button. If you want to learn my secrets to trading the stock market, go to stockmarketgambler.com. Put in your name and email. I'll send you my secrets for free. You don't even have to buy the book. Now, Jesse Livermore, like I say, I think you can get this easily under $20. Maybe you find a deal under $10 for a used copy. But it's a great read. Jesse Livermore, world's greatest stock trader. So that's all I got for you today. We'll see if this market rebounds next week. I think we'll get a relief rally. Have a great weekend, and I'll talk to you all on Monday. I'm Tall Mike.